All right, let's talk about Palantir Technologies. You've probably heard of them. They're one of the most secretive, most controversial companies out there. And they just dropped some absolutely explosive new financial numbers. I mean, we're talking staggering growth. But there are also some pretty serious red flags. So today, that's what we're going to do. We're going to cut through all the hype, dig into the real data, and answer that one huge question for any investor. Is it actually time to buy?
So, that's the big question, right? Is all this hype around Palantir for real? I mean, we all know the stories about their secrecy and those massive government contracts, but the stock has been grabbing headlines left and right, and we really need to get to the bottom of it. Do the fundamentals of the business actually justify all this excitement? That's exactly what we're here to figure out.
Okay, here's our game plan. First up, we're going to peel back the curtain and see what Palantir actually does. Then we'll break down their business. Who are their customers? After that, it's time for the main event. We're diving deep into the financials. We'll weigh their super optimistic future plans against some of the hidden risks. And at the very end, I'll give you my final verdict. So let's start with the basics. What exactly is Palantir? Well, they got their start way back in 2003, really born out of that post-9/11 world. Their original mission was building this super secretive software for U.S. intelligence agencies, to help track terrorists. But then they had this huge aha moment. They realized that the problem they were solving, making sense of massive, messy piles of data, wasn't just a problem for spies. Huge corporations have the exact same issue. And that pivot, that move into the commercial world, is really the heart of the story we're looking at today. Okay, so what does their software actually do? Well, think of their big platforms. You've got Gotham, Foundry, and the new one, AIP, as being like the central nervous system for a huge organization. It's designed to go out and grab all this chaotic, disconnected data from every single part of a company, pull it all together, and create one single clear picture. The whole point is to let leaders actually make smart decisions instead of guessing. It's all about turning a mountain of noise into a clear signal. All right, so that's the concept, but that brings us to the next logical question. What do they actually sell? It's one thing to use a fancy term like central operating system, but what does that actually look like in the real world for a real customer? Let's break that down. When you look at Palantir's business, it's really split into two different worlds. On one hand, you've got government. This is their bread and butter, their DNA. It's where they started, serving defense and intelligence agencies. It's stable, it's secretive, but the real story, the reason for all the recent hype, is their other segment, commercial. This is their big push into the private sector, and believe me, as we're about to see, this is where all the explosive action is right now. And if you want to understand the value here, just check out this quote from Lando Frost, a food producer. Their VP of supply chain said that creating production schedules used to take them about 40 hours to put together. With Palantir software, it now takes them 30 minutes. Just let that sink in for a second. That's not just a small improvement, that is a complete game changer for a core part of their business. And it's not just in the commercial world. Over on the government side, the impact is just as powerful. The U.S. Department of State, for example, used Palantir to cut down the time it takes to clear new candidates from 60 days all the way down to just 12. Now, if you know anything about government bureaucracy, you know that kind of speed is basically unheard of. It just goes to show how this software can light a fire under really critical processes. Okay, so the real-world examples are definitely impressive, no doubt about it. But the big question is, does all that value actually show up in the financial statements? It's time to pop the hood and investigate the numbers. This is where the story has to line up with the spreadsheet. And wow, the first number you see when you look, it is absolutely staggering. In the second quarter of 2025, Palantir's U.S. commercial revenue grew by 93% compared to the same time last year. Let me just say that again, 93%. That's not just regular growth, that's like hitting the afterburners. It really suggests that their big push into the private sector is hitting a massive inflection point. But here's the thing, that kind of explosive growth can cost a ton of money. It can burn through cash like crazy. And that leads us to the multi-billion-dollar question. Is any of this growth actually profitable? And folks, this is where the story of Palantir gets really interesting and also pretty complicated. And this right here, this is the central puzzle of Palantir. On one hand, the company is shouting from the rooftops about their huge adjusted operating income, $464 million. But then you go and look at their official SEC filing, the one that has to follow the strict rules, what we call GAAP, and you see something completely different. a total accumulated deficit of $4.6 billion. So what's the difference? Well, that adjusted number conveniently leaves out some major real-world costs, the biggest one being stock-based compensation. That's them paying their employees with stock. So while the company is painting this very profitable picture, the official books show they've actually lost billions over time. This is the core conflict every single investor has to wrap their head around. So to help us make sense of all this, let's bring in a really useful tool for looking at software companies. It's called the Rule of 40. Honestly, the best way to think about it is like an athleticism score for a business. It's super simple. You just take the company's revenue growth rate and you add it to its profit margin. If that final number is over 40%, it's generally considered a sign of a really healthy, high-performing company that knows how to balance growing fast with making money. Okay, so what's Palantir's score? Get ready for this. Their Rule of 40 score for this quarter is 94%. Yeah, let me say that again, 94%. This is absolutely an elite, world-class score. It tells you that this company is operating at an incredibly high level of both growth and efficiency, at least when you're looking at those adjusted numbers. And just to put that 94% into perspective, let's look at some of the other big players. Now, it's not quite at the insane level of an AI giant like NVIDIA, which is sitting at 122%, but it is way ahead of a titan like Microsoft, which is at 67%. So we're not just talking good here. This is truly elite level performance. And there's more good news. If you look at their balance sheet, it is an absolute fortress. Their latest filing shows they are sitting on $6 billion in cash and U.S. Treasury securities, and this part is huge. They have zero debt. Zilch. That gives them an incredible amount of freedom to invest, to buy other companies, and to basically ride out any economic storm without ever having to worry about making interest payments. All right, so with that whole financial picture in our heads, let's start looking to the future. In this next part, we're going to put the company's super optimistic predictions side by side with the very real risks that, by law, they have to tell their investors about. And when you look ahead, Palantir's own forecast is incredibly optimistic. I mean, they're predicting revenues over $4.1 billion, nearly $2 billion in that adjusted operating income, and they're promising to keep that U.S. commercial growth going at a blistering pace of at least 85%. The message they're sending is loud and clear. The rocket ship is just taking off. But then you read the fine print, and in their official SEC filing, they lay out some pretty sobering risks. They straight up admit that this crazy growth might not be sustainable, and that their history of losing money could continue. They also point out a huge vulnerability. Their government contracts can be terminated for convenience. You know what that means? It means the government can basically cancel the contract for almost any reason at all. It's a pretty stark reminder that behind all those confident predictions, there are some very real risks. Okay, so we've looked at the business, we've dug into the financials, we've seen the rosy future they're painting, and we've acknowledged the risks. That brings us to the final, most important part. After weighing all of this evidence, what's the verdict? What's the call? The verdict is a buy. Now look, despite the very real and significant risks that we just talked about, the evidence overwhelmingly points to a company that is hitting a massive growth inflection point, backed by truly elite operational numbers. So why a buy? For me, it really boils down to two huge things. Number one, that explosive 93% growth in their U.S. commercial business. That is not just a one-time blip. That's a seismic shift that signals huge market adoption. And number two, that Rule of 40 score of 94%. That number is just in a league of its own. It's the sign of a truly elite company that is firing on all cylinders, mastering both incredible growth and efficiency at the same time. But of course, no investment is a sure thing. So just to make sure we're keeping a balanced perspective here, we have to ask the tough question. What is the single biggest risk that could completely blow up this buy recommendation? And here it is. The number one risk is that huge gap, that chasm between their fantastic adjusted numbers and the hard reality of their official accounting, which still shows that $4.6 billion accumulated deficit. The entire argument for buying this stock, the entire bull case, rests on one single thing: their ability to finally bridge that gap and turn all this incredible hype and operational success into sustained, real bottom-line profit. The momentum is undeniable, but the final test is proving it on paper for real.